It's fair to say the start to 2022 has been tough going on the markets. This week marked the 6th straight week of declines on the S&P 500. The S&P 500 benchmark index almost entered a bear market, and the Nasdaq Technology Index just about entered crash territory. There's a lot of uncertainty playing out. Interestingly, however, the Nasdaq had its best day on markets for the Friday session since 2020, so investors and analysts are wondering what that means for the week up ahead. Along with everything playing out on the indexes themselves, we saw the crypto markets have a meltdown. Elon Musk was causing a lot of excitement with some tweets again. We got another US CPI inflation print and all of the accompanying interest rates and inflation discussion. And of course, it wouldn't be a weekly wrap without talking about lithium, the EV battery material space, and some new developments for the cohort. Hope you're going well. Park up, enjoy a cup of tea or coffee, and welcome to this week's weekly wrap. Starting off, where else but with the US CPI inflation print? As we know, we got the inflation print this past week. It was once again hotly anticipated, as they all are. We know that inflation's been running at a 40-year record high. And this past month for April, we saw headline CPI was at 8.3%. This was slightly lower than the previous month at 8.5%, but still near the record highs. It was higher than consensus as well, which was 8.1%. Of course, a lot of the questions at this current time now is, are we reaching peak inflation? But of course, that question is not isolated. It's also accompanied by what is going to be the rate of deceleration, if so, and how long will it take us to get towards the Federal Reserve and other central banks' guidelines and levels. So along with the headline CPI figure, we got the core CPI too. It advanced by 6.2% year on year. This was higher than consensus and again drove discussions about the pace of deceleration. Having a look at below the hoods, some of the interesting discussions with shelter costs, they rose at their fastest pace since 1991, and shelter costs, as you can see, make up around about a third of the total CPI basket. Interestingly as well, airline fares rose by 18.6% for the month. I guess it's not surprising. If you look around, I'm sure you've got friends, family, perhaps even yourself, who's either been on a trip or is planning a trip, particularly after the lockdowns. Now, in terms of the reaction, the Federal Reserve has not changed their tune. It looks like 2 50 basis point rises will be a formality, barring, of course, any black swan events at the next two meetings for the Federal Reserve. We know central banks around the world have been starting to tighten as well. And of course, we've got some insights about the quantitative tightening, which will commence from June the 1st and scale up for the 3 months after that. It's also worth noting as well that the 10-year yield, the benchmark index there, is also trading in and around that 3% mark. And now moving on to another market. It's a fascinating market. We all know about the discussion surrounding crypto, but the crypto markets over this past week have had a meltdown. In a single session, crypto market shared nearly $200 billion worth of value. The total market cap for crypto is now below that $1.5 trillion mark. In terms of key levels, Bitcoin, it cracked below and is still below the 30k USD level, and Ethereum poked its head below but is trading in and around that 2k USD level. However, a lot of the discussion over this past week, of course, centered around Terra Luna. The Luna token absolutely collapsed, and Terra USD, which was pegged 1-for-1 with the US dollar, it lost its peg. And of course, as a result of that, there has been a huge amount of mayhem and chaos flowing through the market. Without rehashing the story, if you are interested in finding out what happened with Terra Luna, we did a deep dive video at the back end of last week, which we'll leave a link to, that you can check out and get that overview about it all. And then, as mentioned, the weekly wraps, he's been a very regular figure over the past few weeks. It's Elon Musk. We know that ever since Elon Musk announced his $44 billion bid for Twitter, there's been a lot of eyes and attention over how they'd navigate this. And he's definitely not been keeping it behind closed doors. He's been very public about a lot of the discussions on Twitter itself. This week was no different. Elon Musk initially stated with a tweet that the Twitter deal was on hold as he awaited more data surrounding how many bots there were on the platform. We know this has been a point of contention and of course a point of his focus for the acquisition. The stock sold off over 15% on that initial tweet. However, he followed it up pretty quickly with another tweet just 2 hours later stating that he was still committed to the acquisition. The share price itself for TWTR was off session lows. It bounced from that low after the initial tweet. However, it still closed down by around about 10%, which indicates that the market's got a little bit of uncertainty about whether this deal will end up closing. I'd love to know your thoughts on it, so drop in a comment. Let us know what you think is going to play out with Twitter, as well as everything else that we've discussed with this weekly wrap. And of course, It wouldn't be a weekly wrap without discussing the EV battery materials space. We know lithium, along with nickel, cobalt, copper, graphite, there's a lot of attentions on this as the electric vehicle transition continues on. We've discussed the Defense Production Act, which Joe Biden invoked over the past few weeks. If you're interested in that, there's other videos on the channel you can check out. But now there's some further discussion about the expansion of this Defense Production Act, which will include the UK as well as Australia for critical minerals. And it's going to be fascinating to see if there's a trading block opening up surrounding these EV battery materials. The US Department of Defense has asked Congress to let it fund facilities in both the UK and Australia to process strategic minerals. Now, this has not gone through yet. It is a proposal, but this is further indication about the need to localize and bolster out critical mineral supply chains and the focus on collaboration for these battery raw materials to be sourced. It's a fascinating discussion. It is worth noting as well that this is an election week. Next Saturday, the 21st of May, Australia will be heading into the election. The final debate has been said and done. It's now behind us. We know there's been a big focus on the cost of living. And of course, we'll be watching for implications about what this could mean for the broader economy and markets too. If you're interested in some other discussions on the channel, here's some links you can check out. A big thank you for joining us. For now, stay well and happy investing.